Okay, I just want to explain why we're here tonight or why we decided to come up with these classes. By the way, we're excited because we're going to give them every 3 months as we continue. We're going to come up with different topics that after doing what I do for so long, I realize I have questions that keep coming back, right? Every time I close a client, I have some questions that are coming back. So then Anderson and I, we sit and say, why can we have classes on a regular where we're going to address this subject or these questions, right? So then it can help us. Okay, I know we are all homeowners, at least all of us. But then the question is that I keep receiving is, Patricia, what is next? What about if I want to go for my next house? What should I do? Right? Hey, Patricia, how can I tap into my equity? Patricia, what is the difference between home warranty and home insurance? Since those questions are keep coming up, I felt like there's a need, or as we call, there's a demand. Now we are providing the service. We are providing. I hope tonight a lot of us is going to come out of here with clarification or understanding of all those questions that we have in mind. So that's the reason why we are studying these classes. I hope it makes sense, right? Again, tonight we have Anders Grove. We know Anders has been part of I feel like he's part of Jeb Homes. Every event we have, Anders is there. So thank you so much, Anders, for your support, your time, and your knowledge that you share within the community. We're really appreciative of that.
Thank you for having me. It's a pleasure to be here.
Okay, so then we have Cynthia that is here with us. We have Cynthia is part of Jeb Home. We have Roxana that is here. We have Yvette that are here. So all of them, they are Jeb Homes. And we are glad that you're here. They're going to share with us tonight.
Yeah.
Right? So Cynthia, if we can go to the, can we go to the second page, please? If you don't mind.
Oh, get it up. Hang on. Optimize. Okay, trying to get it to go big here.
Okay.
And all right. Are you
Okay.
seeing the second welcome to beyond the purchase?
Yeah.
Okay.
Yes. And this is what I was just explaining. The reason we are here to just understanding how to build long-term within our property. Some of us have been there for a year, some of us more than a year, and now we are looking in the next thing. What can we do next, right? What is that next step once we already secure the first home? And so please, next slide, please.
Is this one?
Okay, so after we have settled in our house, we transition from buying process into home ownership. This presentation is not if you're about to buy a house. This is we already purchased. Now we have things that we have to do on a regular. What is that? What do we have to do? We have to protect our properties by doing what? By doing maintenance for our property, calling into inspector to come and look things in our property, building that equity, because a lot of time we purchase this first home and then we become comfortable, right? Do we take care of our houses? Do we take care of the curb appeal? Do we what are we doing to improve what we already have, right? Now that we are homeowners, let's pay attention on that. Let's start taking really the home ownership. Let's look having a maintenance on a regular basis, every 3 months, every 6 months, just check, look at your utilities. I'm going to give you a funny example. It doesn't mean if you started with these utility companies that you have to keep it for years or you always have to keep the same thing. You can always shop around, for better option, better price and things like that. Or if you have a home warranty, you don't have to keep the same one over and over and over. You can shop around. Just understanding everything that comes with the house. I think that for all of us, it's really important to keep up with the house, the maintenance of the house, the upkeeping of the house. So then when we're ready for the next step, we have the equity or we tap into the benefit of being homeowner. Please, can you go to the next slide? Okay, so this one we're gonna call it protecting your investment by maintaining your home value. How to protect investment through proper home maintenance. For instance, we just talked about that. It's a curb appeal, keeping home clean, coating, paint, clean windows, replace filters, all that. It's something that comes with the house. And then now, question that comes more often is, what is the difference between home insurance and home warranty? Home warranty, it's something that you buy. It's not mandatory, but it's important. For instance, home warranty, it's something that you buy to protect your washer, dryer, microwave, something that may go wrong. You call them, you give a deductible, they come and fix it. Home insurance, on the other hand, you cannot buy it on loan or fund like something that is financing through a third party or loan, a mortgage without the home insurance. It's a must. You keep it to insure the house if something big happen, tornado, fire, you name it, you are covered, right? And for that, you pay that on a regular, on a monthly basis. It's included in your mortgage. So that's the main difference between insurance and home warranty. So I hope that's clear. Let's go to the next. Oh, I'm waiting for that. Yes. This is the big question that I receive all the time. Patricia, my taxes has increased so, no, first of all, they don't know it's taxes. I receive calls like, Patricia, why is my mortgage keep going up? And my first question that I always ask you guys is, have you applied for your homestead? And then the question is, what is homestead? So please let me emphasize again, if you look at your mortgage and you see that your mortgage have increased by a lot, most likely go to the appraisal district and check if you have applied for the homestead, because you may not have applied for the homestead. And when you didn't apply for the homestead exemption, it is considered, your house now is considered as an investment property, and probably you didn't get the exemption from the homestead. So if you look at your mortgage and it's just increased by a lot, I would say first, it's very simple. Go on appraisal district, put your name or the address of your house to see if you already applied for that. And then if not the case, then go and apply. It's gonna help. And if nothing changes, please reach out to us. Reach out to our office. We are going to help you how to look into the taxes and if it's needed to be protested or whatever the case may be. We may work on some CMA to send it to you so then you can present it for taxes purposes. So please, this is a huge thing in our community. I'm not saying for everybody, but at least the majority of folks that have purchased through us, this is the question that keep coming back over and over and over. Like, I don't know if I apply for homestead. Well, if you don't know, then reach out. Call us, let us help you. But the easiest way to do is just to jump in a appraisal district. You put your name. If not your name, you put your address, and then it should let you know if you did apply or not. And if you didn't, you can always start it today and apply. The only thing you need for that is two things. Your address needs to reflect on the ID. They need to know this is your house. And then you should be able to apply for the homestead. And again, let's go to the next, please, Cynthia. Okay. Paying off mortgage. This is it's a question that we receive at closing, before closing, at closing, and after closing. So therefore, I thought, why can I bring the professional here? I'm gonna bring Anders Grove to help us understand, because how can we pay off our mortgage very quicker? Nobody wants to stay in a mortgage, paying mortgage for 30 years. And there's the way we were raised. We don't work with loans and debt. We want to pay off everything. So please help us understand how can we pay off our mortgage quicker?
Yeah, great question. I always like to say, I want to help you beat the bank. I'm the originator. I help you get in the home. I help you get the initial loan. But over time, how can we beat the bank? What does beat the bank mean? Reduce how much interest we're going to pay, right? So there's a couple of ways we can do that. The first way to do that is pay more towards principal, or the easiest way to do it is to pay half your payment every pay cycle. So if you get paid every 2 weeks, you pay half the payment every 2 weeks. At the end of the year, you will have magically paid one extra payment. If you do that over time on a 30-year scale, you're going to shave 6 to 7 years off the mortgage, and that's going to save you on a $300,000 loan at a 7% interest rate. That could save you in the neighborhood of over $100,000, probably more, 1 to 200,000, by simply just paying one extra payment a year. Now, you don't have to pay it every 2 weeks, like I said. You can just make one extra payment a year, however it works for you. But it's easier if you can set it up on a biweekly pay where you pay half. That's one option. If you're getting extra money, a bonus, tax refunds, a windfall, money you didn't expect, you can always apply that to principal. Now, pro tip, make sure anytime we're putting money to principal, we're calling the servicer or the bank that has your mortgage, and you're specifying you want that money to go straight to principal. Otherwise, the bank's going to apply it where they want, and that's not going to benefit you. Make sure it goes to principal. So that's make extra payments or biweekly payments is the first strategy. A second strategy could be, and we're going to talk a little bit about this later, but refinancing to a shorter term. Now, the reason to do that is to set it and forget it. So maybe you refinance to a 15-year term, your payment's going to increase, but more of that's going to go to principal in the front. So that could be an option. Cutting expenses and redirect savings, right? So maybe play a game with yourself and buy one less coffee a week and take that and apply it to principal. And then yeah, so those are really the main key points. But the biggie is set up yourself for success by making more principal payments throughout the year. And by the way, on a $300,000 loan, one extra payment a year is only $166 per payment. So we'll call that $400 a month extra to get there. So really not a big deal when it comes to budgeting, and it makes a huge impact long term. Did I cover, so benefits paying down, so we talked about that. Pros and cons of refinancing. So what we're looking for, and the great news is, we're in a interest declining environment. Now we're going to have peaks and valleys along the way, but I think the trajectory is going in the right direction over the next 2 to 3 years. What that means is you're going to have an opportunity to refinance. What we're looking for is to drop your rate at least 1 to 2%. So if you're a 7% today, when the rates get to 6 consistently, we can take a look and see, okay, is that a great time to go ahead and lock in and get it done then, versus maybe we wait for it to drop a little lower. All of that really depends on how long are you living in the home. Because if you tell me, hey, I'm not, I'm only gonna live in the home in another couple of years, or maybe I'm gonna move to another one, maybe it doesn't make sense to front load all that cost for the refinance. So we do something when we review, we do something called a break-even analysis. So we look at how much money are we saving per month on principal and interest, and we divide that by the cost of the refinance and divide that over however many months it takes to break even. And then that tells us how long we need to live in the house to make that refinance make sense. So we always do that on every refinance to make sure that we're giving you a benefit, not putting you in the other direction. You also need to understand with the refinance, there are costs involved. So there's the lender costs, there's the title fees, which you will get prorations, meaning you'll get a discount up to 7 years, depending on when you refinance. And then there's going to be costs for escrow, which is your insurance and taxes. Now, the way that works is your current bank is going to cut you a check for whatever's in your escrow account that pays your insurance and taxes for you 30 days after you close. So technically that can be a wash as long as there's money in your current escrow account. On the new loan, we have to set up a new escrow, so that does require cost that is on the increase to the loan amount. But then when you get that check from your current bank for the escrow, you need to take that money and apply that to principal so that it's a net, zero change on the new loan. Is my recommendation. Again, it's cash, you can do whatever you want with it. You pay off bills or you can apply it to the principal. If we're working on building wealth and building investment, the idea would be to apply it to the principal. The other thing that's going to happen is we can structure a refinance where you can skip a couple of payments. So let's say you refinance in March, the loan closes in March, your first payment wouldn't be till May, kind of like when you purchased. So you wouldn't pay your March payment, you wouldn't pay your April, you would pay in May. That's 2 months that you wouldn't be paying into a mortgage. I would recommend taking those 2 payments and applying, instead of skipping a payment, apply them to your principal to continue to get ahead. That's kind of in a nutshell how the refinance game or the world works. We want to make sure it's a benefit for you. In this example, we would be looking at lowering the rate, lowering the payment. Does it make sense to go from an FHA loan to a conventional loan? If we have enough equity, we can drop off the mortgage insurance. And just so we're on the same page, equity is what is the home worth minus what you owe. So you have a value of 400, your mortgage is at 300, your equity, you have $100,000 in home equity to use or apply. And we'll get to this later too, but there are caps on how much of that you can get to, but we'll probably get to that on the next few slides. But I just want to touch on refinances real quick.
Okay. Yeah, thank you, Anders. And just to emphasize in one thing, through the refi and all this, you're gonna check the credit, right? So it's very important that everybody make sure that they keep they protect the credit. Let me put it that way, right? Just to make sure it's not because we are homeowners now that we can kind of forgetting about the credit. So credit is very important because you won't be able to do all this that you just talked about without having a good credit. Am I wrong?
You're 100% correct. It goes with income too. Now remember, you're going to have to qualify for the refinance the same way you qualified for the purchase. We're going to look at your income. We're going to look at your credit. Now, you're not going to need very much cash because it's going to all be added. The closing costs and all the fees will be added to the loan amount. The only technical out-of-pocket cost is for the appraisal, which is $595 in my world. But we also run the underwriting system to see, can we get what's called an appraisal waiver, which means the system accepts the value as is and we don't need an appraisal. But technically on a refinance, you're going to accrue about a $600 out-of-pocket cost. Everything else is rolled in. But you're absolutely right about the credit. Make sure we protect the credit. Your credit is our wealth because you can get a lot better programs with great credit and it's going to be cheaper for you as well.
Correct. You want to take on the next slide since he's talking about home equity. You kind of rush on that a little. And guys, let me tell everyone, if you have any question, you can start dropping them in a chat. You can do in French, you can do in Swahili, in Lingala, in English. We are here to help you, and someone is in the chat who speaks all those languages and will be able to help with questions as they come in. So because at the end we're gonna do a Q&A. Anders, take it away.
I speak mortgage, and if it gets confusing, Patricia, stop me, because sometimes I get jumbled in the talk. So how equity builds over time. So right now in the DFW area, we're probably growing about 45% in equity, or home values. So what happens is a mortgage is cool because as you're paying a mortgage, what you owe goes down, and the asset or your home, the value goes up. So the longer you live in the home and the longer you pay, that spread widens. That spread is your equity. Like I said before, equity is what you owe, or value minus what you owe. So it's very important. And that's why we talked about paying more to the principal so we can increase that equity. Home improvements, you talked a lot about that earlier. The only thing I would add to that, change your air filters. That's probably the easiest thing you can do. And number two, try to hire out the work. I know at the Christmas party, I talked about this too. Hire professionals to do your work, unless you are, some people are really good at it and they can put a professional touch, but if you're not, if you're like me and you're not so handy, you should hire it out, is my recommendation. The third bullet point, we have this really awesome software that me and Patricia are partnered with, and it's called HomeBot AI. And we cover the cost, so it's free to our clients and you out there. So if you're not signed up on it, send us a message and we'll get you signed up. But what's really cool about HomeBot is you're going to get one email a month, just one email, and it's going to give you an update on what is your home value, what is your market doing, what can you do with that equity. If you're looking to buy another home, what's out there in your market or where you want to look, you can do all of that within this app. But the coolest thing it does is keeps you up to date on kind of what your home value is. Because I know we talked a lot about equity, we talked a lot about what value is. So that gives you an idea of where things are trending. And then it gives you ideas of, okay, if you refinance today, here's what the market rates are. So does it make sense? Kind of gives you a little smart version of what your house looks like in a snapshot each month. So like I said, if you're not signed up on that, let us know. We'll get you signed up. It's just one more tool to help you achieve your dreams of turning things into investments. If you want to go to the next slide, we'll see unless you have anything else to add there, Tricia. I think that.
Yeah, so I was going to emphasize why we are talking about all this, appealing of the house, maintenance of the house, and because that is something that is going to help everyone in the long run, right? Yes, we have homes, yes, we have houses, but then if you really want to build, why are we here today? Because we want to leverage our homes to build the next thing, to build that legacy, right? That probably second home or where have you. In order to do that, let's take care of what we have. Let's protect it. Let's make sure we keep building up on this equity. And how you do it? By improving your home, right? You may purchase a house. I found myself where I purchase a house, but then I keep improving it, right? We're not saying go and big, and I mean, if you can afford it, why not and do pools? But we're not talking about pools. We're talking about something as small as changing from carpet to wood, right? Just keep on improving your home, because one day you're gonna bank on that. That's gonna be your bank. You're gonna tap into that equity to purchase the next thing. So that was just something I was trying to emphasize on.
Love it. So let's we've talked about equity. We've talked about what it is. We've talked about how we can increase it. Now let's talk about what can we do with it. There's a couple of ways to use your equity to buy another home. The first one I want to talk about is what we call in the mortgage world a primary property conversion. So what that is you're taking your current home that you're living in, your primary residence, and you're going to rent it out to renters that are going to cover your mortgage. And now you're going to go buy the new home as your primary. So you're doubling your ownership, right? You're creating wealth by having someone else pay your mortgage on your current home, and you're leveling up and buying the new home. Or you could level down. You could go either way, whatever works best and whatever makes sense for you. Now the key there is though, when Patricia talks about credit, the key to the primary property conversion is it can only be done in the conventional world, conventional financing. Most of the time, conventional financing is going to require a 700 credit score or more. So just keep that in mind. They're a little bit tighter on credit, but that's how you perform that. That's how you can buy another property using your current home. The other way is to maybe say you love your primary home, so you don't want to rent it out, but you want to buy some investment properties because you want to build your wealth, or you want to buy an investment property. You can borrow, if you have enough equity in your current home, you can borrow some of that equity to purchase the new investment property. Now, with that method, you're going to have to, well, let me back up. How do you get the equity? Number one, you can do what's called a HELOC, or a home equity line of credit. So let's say you have $100,000 in equity and you do a HELOC and you access all of that equity, you're going to get a checkbook that you can write up to $100,000, right? You don't make a payment on that until you use that money. That's what a line of credit is. We also have another tool that's called a HELoan, where you can take the $100,000 right now and use it, but you're starting to make payments out of the gate because we're giving you the money up front versus having a line of credit. There's some nuances between the two that make sense versus the other. So that's where you want to get with the mortgage professional and understand which one's your best option. And then the third one is you can do what's called a cash out loan. So we're going to refinance your first mortgage and give you the equity, the $100,000 out of the house, and then you're going to make one payment moving forward. The HELOC and HELoan, you're going to have two payments because those are going to be second liens, just to clarify. And then what I would recommend you do with that cash when you go to buy the new property, you buy the investment property using a loan called a DSCR, or it stands for Debt Service Coverage Ratio Loan. The reason why is because we're going to qualify you based on what that property will rent versus your income. So let's say you may only have enough income for your primary residence and you love that residence, but you want to buy another property, but you don't make enough money to cover both mortgages. We're going to use the debt for the rents to cover that mortgage. So all you need is the cash that you're getting from the house. So those are the two ways that you can access your current home to buy an investment property.
Okay.
You want to add to that?
No, I'm gonna just emphasize on a credit. All
Yeah.
this is gonna happen if you protect your credit and the income, of course. Yeah.
Okay. Let's go. I think that's it for leveraging your equity. I want to stop just for a second though, because I know I covered a lot, and see, Cynthia, I don't know if I can where it's at, but the chat, is there any?
I'm gonna go and read
Sure,
on
there was some stuff in there about all of it.
I'm gonna read on the chat, and then probably you're gonna start answering the questions, right? Because some
Sure.
of them are in French and things like that. So I'm gonna start all the way on the top. Okay, Fatou asked a question. Will you alert us when it's a good time to refi?
Great question. Two ways. HomeBot is going to give you an idea, and then you can reach out to me because it's going to tell you the rates have fallen. It's a great time to refinance. I also get a Wednesday report for anyone that I've worked with and closed that tells me who's on my radar. And I always look through there and make sure if there's anybody ready to go, I'll reach out to you. So we kind of cover that both ways for sure, because we want to help you on the next time around too. And to that, I do have some really good refinance programs for anyone that's worked with me. We're going to give a credit to help either take care of some of the cost or buy down the rate. Usually I recommend buying down the rate as low as we can, trying to get most bang for your buck. But just say that to let you know I do have some programs to help folks that come my way.
That's good. So Ange is asking a question. She's saying she's
Yes, she wants
emphasizing.
HomeBot.
I'll love to sign up for that. You mean for the home HomeBot, Ange?
Yeah.
I think she meant the HomeBot. So we're gonna send, by the way, we're gonna send an email probably by tomorrow. You receive an email with everything that like HomeBot link, how to sign up, because I know Anders sent that to everybody. You have to register and put your information and stuff like that. So that HomeBot, it help you because you're gonna receive a report of your property. You're gonna see how your property is performing in a market. And then if you wanna be specific, you can always reach out to us. You can, because sometimes it can be a little off. I had people who were like, no, my property is more than that.
Mhm.
I agree. It's just, it's a CRM that it's a program that we are using. We can go in details if you really wanna have more, or if you don't agree with the value that the system is giving you. Florence is asking, do you have a list of professionals that you can email to your client so whenever we need it, we can just check that list? We'd love for you guys to reach out to us, and you can reach to us. This is Florence. You can reach to us through email, or you can text, and you can ask a specific one. Why we don't want to share the entire list? This is number one. Some of them, they'll leave the profession. And I don't want to send you a list of a plumber who used to be a plumber. Now he's a roofer. We'll know that, you won't know that. So we'd rather you reach out to us, and then we're going to share the list. I hope that helped. Papi say, you need to pay closing costs if you decide to refi your home.
Yeah, so great question. And the way we can do it to where your closing costs are covered is, remember, you're going to get your escrow refund back, so that should wash some of that cost. You're also going to miss 2 months of payments, so that covers that cost too. You can either apply it to principal, which, remember, all of the costs on a refinance, unless you wanted to bring money to closing, are all going to be applied to the loan amount. So when you miss those 2 payments, instead of missing payments, which you would be paying anyway, apply those to the principal to reduce your costs. So 2 payments, let's say your payments are, I don't know, $2,500 a month. That's 5,000. Let's say your escrow has 5,000. So that's a net 10,000 that you're going to get to offset. And most of the time, it makes it pretty close to even if you do it that way. But there are fees, yes. Lender fee, title fees that are prorated, and escrow setup, because we have to reset up a new escrow.
So I think without talking to Papi, I think the question also is more learning as when he said closing costs, he may also talking about down payment. Do we have down payment as well?
Yes, that's a great question.
Yeah.
If that's the route, if that's the question, then no, there's no down payment. All fees are added to the loan amount. Really, all you're bringing is the appraisal cost, or paying the appraisal cost, if there is one needed.
Okay.
But that's a really good question. I have had that one before. No, you don't have to bring down payment again. You did that on the first time, so refinance, we're good.
Okay, good. Thank you. Can someone borrow the equity? This is Fatu. Can someone borrow the equity to do something else, or just use to buy another property?
Awesome. I love that question because it was actually my notes, but I didn't say it. Yes, you can use that money for anything you want. The next question I get, is that money taxed? No, it's cash for you. It's not taxed. It's your money. It's your equity. You get it out, you can use it for whatever you want. You can open a business. You can take a big vacation. Don't recommend, because it's
don't recommend that, please. Do not.
But you could. You could. So those are, it's your money to do what you want, and it's not taxed.
Okay. And Whitney's asking, can buyers take the equity HELOC under FHA to buy an investment property? Yeah, I think you already responded to that. But
Well, one quick I guess if you have an FHA, yes, you can go get a HELOC as well on top of that and use that towards investment. Yes, that is correct.
And then Mathurin is asking, hey, Mathurin, it's been a long time. Mathurin is asking, how good should the credit score be for that to happen? Meaning HELOC, tap into the and so forth.
So HELOCs are a little bit trickier. They fall in the conventional space. Most banks are going to be a 700 or more on HELOCs. You might get a 680 through, but it's tough. They're really hard. Now, cash out loans are a little bit friendlier. You can technically go down to 620 depending on the situation. Sometimes we're able to get them to go there, but usually, you know, HELOC land, you're going to be 700 or more is what they're going to want. A little bit tougher to qualify for.
And Patu is asking a very good question. He says, homestead is applied once a year or once every year or just once in a lifetime where you are staying in the house? And the answer is going to be, it's when you are staying in the house once. You don't have to do it every year. And then if you happen to sell that house, or then that house become your investment property, and then you purchase a second one, you're going to remove homestead from that house. You're going to apply now on a new house. But just to answer your question, no, you apply once in the house and that's it. You don't have to do that every year. Florence, are we going to get a record of this at the end? Unfortunately not. We're not going to do that, but we're going to put that on our YouTube channel. And then you can go on a YouTube channel and then you're going to get the recording. Let me correct that actually. Roxana, is that true? Well, Cynthia, is that true? I don't know. I don't want to say anything that is not true.
I think we
they
should.
can view it. They can view the channel. They can view the recording, bits and pieces of it. Yeah.
All right, perfect. Thank you for correcting me. I didn't want to start running my mouth, and that's not true. So thank you. Raul is asking, can you please talk more on the appraisal process? How do we go about doing the appraisal? Because our mortgage went up due to the county taxes. It will be going up every year. Raul, my first question for you is, did you apply for the homestead? Have you applied for the homestead exemption? That would be my first question. And then second question, reach out, let's look at your taxes and see what's going on there, or your mortgage statement, and we should be able to advise what to do about your situation. But first thing first, when I hear a question like this, Anders, correct me, Cynthia, correct me if I'm wrong. When I hear a question like this, it's most likely you haven't applied for your homestead yet. So then they are just giving you a full blown taxes as an investor. Cynthia, you want to jump on it? Because you do that all day long at the office.
Yeah, I'm a behind the scenes kind of girl. It's like, yeah, as far as homestead, that's the first clue. If your mortgage is going up, it's because your taxes have gone up, and that's because your home value has gone up. So it's kind of a good and bad. You want your home value to go up, but with that, your taxes are also going up, which is going to increase your mortgage payment. In which case, like Patricia said, the only way to lower that tax payment is to file for your homestead exemption. If you need help with that, I will be more than glad to help you. The first step is going on to your county website. Let's say you're in Denton County. You go to Denton County CAD, and there you can pull up your property. You'll pull it up by your address or by your name, and it'll show on there whether or not you filed for a homestead. If not, then I can help you get that application, help you get all the account number and everything you need, and help you get that applied. And you can even apply for previous years. You can go back 2 years to apply for a homestead. So meaning you can go to, this is 25, you can apply starting, if you were in the house in 23, you can apply going back to 23, and they will issue a credit for your taxes for the, starting in 23 till current. So yes, it's very, very important to file for a homestead and get that in place. And I will be more than glad to help you with that.
So thank you, Cynthia.
Mhm.
Raul, thank you so much. He said he already did. He filed for homestead exemption. He said his insurance went up. This is what I would say, just the same way we do with cars. I don't know about you guys, maybe you don't change, but every year I try to change everything because it's keep going up. Like for my car, I have to call car insurance and see which one is going to be cheaper. Same thing for the house. You don't have to be stuck with the same insurance for the entire time. Just keep calling, and we have vendors, not vendors, but folks who can help you with that. We have two companies that we use back and forth, and they are brokers, so they will pull up and see whatever company is going to be cheaper or beneficial versus what you have, and that sometimes will help. So if you see that your insurances keep going up, or taxes, or any question like that, just reach out to us and we're going to look into that and we'll be able to help you. My house is getting older and the home insurance is getting up. So Patu, same thing for you. Reach out. We have two vendors. Cynthia's going to send out an email, right, on tomorrow with all the vendors, not all the vendors, but the vendors that will help with the insurance and things like that. So you can reach out to them and they will be able to look at it and see if they can give you something cheaper compared to what you have now. Cynthia, you wanted to say something?
Yeah, I've just sent the email already. So it's in everybody's inbox with the list of the vendors.
Okay,
Yeah.
that's amazing. Maturin say, so if homestead exemption, a yearly application or one time, it's a one time, you apply one time and that's it. I need one for insurance. Yes, Florence, Cynthia sent the vendor list. We have insurance folks in there. It's Joe Murphy and Will. So reach out to both of them and then compare versus what you have. So I think on chat, that's all I have on the chat. Again, guys, we are so happy. I explained at the beginning that we're gonna try to do this every 3 months, and we wanna hear from you. If you think this session was helpful, let us know. You have all our contact. Let us know if it was helpful. That's number one. Number two, make sure you register for the second session or the follow-up section, which is going to happen in June. Go and scan the QR code. Just and register for that. The next class is going to talk about estate planning. That's something that we don't talk about in a community, in our community at least, that I'm aware of. Trust and will. So yes, you already secure a home. Yes, you have this, probably the biggest investment of your life. Now, how do you prepare it? How do you protect it, right? How can you put on a trust that if something, God forbid, but if something happened today, is that property protected? So we are going to discuss, we're going to bring an expert. I'm not an expert, but we're going to invite an expert who's going to talk about estate planning, trust, and will. And I really, really encourage each one of you guys, go ahead and register. And then, as we say, sharing is caring. So go back in the community and share with everybody. Whoever missed tonight, tell them about this. So then in June, they can be with us. And then if there's any other thing that you want us to discuss, please reach out, let us know, and we'll be more than happy to put out on our schedule so then we can also discuss the same thing. This is for you, it's not for us. We do these classes for you guys. We want to hear from you. And what are those questions that are really, really, not bothering, but that are present that you want us to address? All right. If there's no other question, I think we are done for tonight.